everyone, welcome back to my channel Ask Parul. If you're wondering how to set yourself up for a comfortable and secure retirement planning in the year 2025, you are in the right place. Today I will be breaking down the 5 key strategies to help you retire confidently and with that peace of mind, no matter wherever you are living, whether you reside in India, Australia or the US. So why the focus is on the year 2025? Because it's a year full of shifting economic trends, new investment opportunities and crucial updates in financial planning you can't afford to miss. From inflation concerns to technological advancements, staying ahead of the curve requires smart and proactive planning. So strategy number 1 that we have is to reassess your retirement goals. First things first is to reassess your retirement goals. The cost of living has changed and so has the future projections. Let's quickly take a look at the healthcare and living expenses in 2025 across the US, Australia and India. So different data points by region suggest that in US, healthcare costs are expected to increase by 5 to 7% annually. For example, the average annual healthcare costs for retirees is currently around 6 to 7,000, which is only going to go up. In Australia as well, the cost of living is expected to increase by 3 to 4% per year, and health insurance premiums for older Australians are likely to increase, with annual premium already averaging about 5,000 Australian dollar for comprehensive cover. In India as well, the healthcare inflation is projected to remain high, approximately 8 to 10%, and medical expenses for retirees can quickly add up, especially for chronic conditions, with healthcare costs expected to double in the next 7 to 10 years. So think about the life that you want in retirement and adjust your goals accordingly. It's about living comfortably and securing your future. The second strategy that we would be looking is to diversify your investments. Now, 2025 would still require a diversified investment approach, and let's take a look at what are different options available across different regions. So let's take a look at United States. In the US, the tech sector is projected to grow by 12 to 15% annually, and clean energy investments are going to gain momentum. Treasury bonds may also offer steady income, with interest rates expected to stabilize in the year 2025. In Australia, real estate will continue to remain a strong investment, and renewable energy and mining are also promising sectors. In India, the diversifying with a mix of equities, fixed deposits, and government schemes like the Senior Citizen Savings Schemes, which is SCSS, or Public Provident Fund, PPF, can yield returns of 7 to 8%. The stock market also remains a high growth area driven by India's booming economy. But please note that investing in stocks or real estate involves risk, and it can also lead to potential loss of principal. So please do your own due diligence when investing in any instrument. And by the way, if you do want to buy your first stock this year, you could consider using Mommoo, which is a beginner friendly online broker that allows you to invest in both US stocks and Australian stock markets. The great thing about Mommoo is that it has chess sponsorship, which means that you own the shares directly under your name, which is a nice secure feature to have. They also have low brokerage fees, which is starting around $3 per trade for Aussie stocks and 99 cents per trade for US stocks. Furthermore, with the US elections, which has generated significant interest lately, Trump's policies and propositions during his tenures have profoundly impacted various industries, presenting numerous investment opportunities. Mommoo's investment team function allows you to easily explore stocks related to Trump or cryptocurrencies, all just with one click. And additionally, with Mommoo's 24-hour trading, you can seize potential investment opportunities without having to wait for normal trading hours to resume. Mommoo is also currently offering a great promotion for new Australian investors, wherein if you use the link given below, you will receive number 1, up to 10 free stocks worth up to 3,000 Australian dollar available if you meet specific deposit thresholds. Secondly, you will get $2,000 brokerage fee cards for both Aussie and US stocks for the first first 30 days when you complete your first buying order. I'm not too sure how long they'll keep this current offer, so if you are interested, then use the link given below and check out their terms and conditions before you sign up to claim these rewards. Don't miss out. So the third strategy that we have is to maximize your retirement accounts. Now the key question you should be asking yourself is that, are you maxing out your retirement accounts? Now let's break down the key accounts in each country and see how we can best leverage them. In the US, for example, 2025 contribution limit for a 401k is projected to be around $24,000 for those over 50, with catch-up contributions becoming even more critical as the retirement nears. In Australia as well, you should try to make most of your superannuation contributions, and the annual concessional contribution cap as of July 2024 has been increased to Australian dollar $30,000. So consider making extra contributions if your finances allow it, as the government offers tax incentives. And also don't forget to make use of any carry forward contributions up to 5 years. So for example, in the year 2019 to 2020, for that financial year, if you have any unused superannuation amount that is not being used by the end of FY 24-25, then that would get expired. So do check that out. In India, for example, you can utilize government-backed retirement saving options. Contributions to the National Pension Scheme (NPS) are tax deductible for up to 2 lakh rupees under Section 80C and 80CCD. And do ensure that you are meeting with a financial advisor to review your accounts and adjust your contributions. The goal is to optimize your tax savings and to grow your retirement nest egg. The fourth strategy that we should be looking is to protect your future and to consider healthcare and long-term care. So of course, as we age, healthcare becomes a huge expense, and here is what you should be looking to plan for in 2025 based on where you live. In the US, for example, the cost of private nursing home room averages around $9,000 per month, and this is just increasing. Medicare premiums are also expected to rise by 5 to 7%. In Australia, long-term care costs can range somewhere from $300,000 to $500,000 in Australian currency over several years. So it's very important that you start considering aged care insurance and options related to that early on, and 2025 is a good year to look at that. In India as well, with limited public healthcare support, having private health insurance is crucial. The average cost of long-term hospital care can range from 10 lakh to 15 lakh, and it can go even further higher depending on the city and the level of care and what kind of conditions you have. So it's very important that from Medicare options to private insurance plans, you should ensure that you are covered, and planning ahead is a key to protecting your health and health as well. So the fifth strategy that we have is to start building passive income streams. Now imagine retiring with not just a pension or the government would be dependent on, but having multiple income streams. And there are some passive income stream and opportunities that can vary globally. So for example, if you are in the US or Australia, real estate investment options like the rental properties or dividend paying stocks can provide a steady income. But again, like I always say, that investing involves risks and dividends are not guaranteed. So please do your own due diligence before investing in any instrument. In India as well, fixed deposit interest rates can vary between 6 to 7%. If you are a senior citizen, you can actually get a much better rate. Mutual funds or dividend stocks are also a great way to diversify your income streams. So passive income can be your safety net, giving you the freedom to enjoy your life without having the financial worry. So there you have it. Those were the 5 key strategies: reassessing your goals, diversifying your instruments, maximizing your retirement accounts, planning for healthcare, and start building passive income streams. The retirement landscape of 2025 is full of possibilities. You just have to start planning ahead. And if you are interested to learn more about retirement, whether your retirement corpus is enough or not, what kind of instruments you can leverage to start building that solid retirement corpus. I have done a recent podcast with NRI Money Clinic, Dr. Chandrakant Bhatt, who is an expert, and he has given lots and lots of insights around it. The video is linked here. Go check that out. Until I see you the next time, goodbye. Take care.